Based on the historical data and forecast, Bitcoin demonstrates a fluctuating trend with periods of consolidation and upward momentum. The RSI consistently remains below 80, indicating that the asset is not in an overbought condition. The recent RSI values, particularly on October 26 at 54.4, suggest a potential for further upward movement. Considering the forecast, the price is projected to increase, reaching $118,400 by November 02 ND. Therefore, I recommend a long position with an entry price of $113,400. To mitigate risk, set a stop loss at $112,000, aligning with the established support level. The initial target price should be $116,200, coinciding with the center of the Bollinger Bands and a reasonable profit margin. To capitalize on the anticipated upward trend, I propose a second long position with an entry price of $115,000 on October 28, if the price reaches that level. The stop loss for this position should be $113,700, and the target price should be $118,400, aligning with the forecast high. This strategy combines RSI and Bollinger Band signals to maximize potential returns while managing risk effectively. The portfolio will consist of 60% of the first strategy and 40% of the second strategy. This allocation balances the potential for steady gains with the opportunity for higher returns. Based on the historical data and forecast, Ethereum has shown a fluctuating trend with a recent upward momentum. The RSI consistently remained below 80, indicating that the asset is not currently overbought. The forecast prices suggest a continued upward trajectory, reaching $4,320 by November 2, 2025. Considering these factors, I propose a long position strategy. Entry price should be set at $4,070, with a stop loss placed at $3,800, aligning with the established support level to mitigate potential losses. The initial target price is $4,170, near the forecast price for November 1, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. If the price reaches $4,130, consider adding to the position. A secondary target price can be set at $4,320, aligning with the forecast high. This layered approach allows for maximizing profits while managing risk effectively. The combined RSI and Bollinger Band strategy provides a robust framework for capitalizing on the anticipated upward trend in Ethereum. Based on the historical data and forecast, XRP demonstrates a fluctuating trend with a recent upward bias, supported by the closing prices climbing towards $2.65. The RSI consistently hovers around the middle range, indicating neither strong overbought nor oversold conditions, but with a recent push towards the 50 mark. The Bollinger Bands show a narrowing trend, suggesting decreasing volatility. Considering these factors, I propose a moderately bullish strategy. We will implement a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels for optimal risk-reward ratio. Initially, we will enter a long position at $2.55, coinciding with the forecast price for October 27, 2025, and near the support level of $2.29. To mitigate risk, we'll set a stop loss at $2.45, just below the lower Bollinger Band, providing a buffer against short-term price dips. Our primary target price will be $2.64, aligning with the forecast for November 2, 2025, and a reasonable move towards the resistance level of $2.75. If the price action breaks above $2.64, we will adjust the target to $2.75, capitalizing on the potential breakout. This combined approach leverages technical indicators and price forecasts to maximize potential gains while minimizing downside risk. Based on the historical data and forecast, BNB has shown a fluctuating trend with periods of consolidation and minor upward movement. The price has consistently found support around $1,060, while the resistance level is at $1,300. The RSI readings have generally been between 45 and 65, indicating neither strongly overbought nor oversold conditions. The Bollinger Bands have widened and narrowed, suggesting periods of increased and decreased volatility. Considering the forecast for the next week, which predicts a range between $11.10 and $11.60, I recommend a moderately bullish strategy focusing on short-term gains. My proposed strategy is to enter a long position at $1,130, coinciding with a slight dip in the forecast price and a potential bounce from the recent trading range. We will set a stop-loss order at $1,060, just below the established support level, to limit potential losses. The initial target price will be $1,160, aligning with the upper end of the forecast range and a potential test of the recent resistance. If the price reaches $1,160, we can consider moving the stop-loss to break even to protect profits and potentially extend the target price to $1,210, anticipating a further upward move if momentum continues. This strategy combines technical indicators with price action analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a slightly upward trend, though it has tested the support level of $180 recently. The RSI consistently remains below 50, indicating a generally neutral to slightly bearish momentum. The forecast prices are projected to be relatively stable, fluctuating between $193 and $199. Given these conditions, I recommend a moderately bullish strategy utilizing a combination of RSI and Bollinger Band signals. My proposed strategy involves a long position entry at $193 when the price shows signs of bouncing off the support level. The stop-loss should be set at $183, just below the recent low, to limit potential losses. The initial target price is $199, aligning with the forecast high for the week. We can then implement a trailing stop-loss strategy, moving the stop-loss up as the price increases, to secure profits. If the price reaches $199, consider taking partial profits and adjusting the stop-loss to break even, allowing for further upside potential. This strategy balances risk and reward, capitalizing on the anticipated upward momentum while protecting against potential downturns. Based on the historical data and forecast, Dogecoin exhibits a downtrend with increasing volatility. The RSI consistently hovers between 35 and 48, indicating neither strong oversold nor overbought conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the recent price action has breached the upper band, indicating a potential upward movement. Considering these factors, I recommend a cautious long strategy. The entry price should be $0.199, coinciding with the initial forecast price and a slight bounce from the recent low. A stop-loss should be placed at $0.188, just below the support level of $0.185, to limit potential losses. The target price should be $0.206, aligned with the forecast price for November 2, 2025. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. If the RSI drops below 30, indicating oversold conditions, we should consider entering a long position at $0.195 with a stop-loss at $0.185 and a target of $0.205. Conversely, if the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price breaks above the upper Bollinger Band, it suggests a potential short-term overbought condition, and we should consider exiting the long position or tightening the stop-loss. This combined approach, blending trend analysis with technical indicators, offers a balanced strategy for maximizing returns while managing risk. Based on the historical data and forecast, TRON shows a declining trend. The price has been fluctuating between a support price of $0.297 and a resistance price of $0.309. The RSI indicates oversold conditions at times, but the overall trend suggests further downside potential. The Bollinger Bands show that the price is approaching the lower band, which could indicate a potential for a further decline. Therefore, I recommend a short position strategy. Enter a short position at $0.3, setting a stop-loss at $0.304 to limit potential losses. A target price of $0.292 can be set to realize profits when the price declines. To refine the strategy, we can incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, which could be an entry point for a short position. Conversely, when the price touches the lower Bollinger Band, it also suggests a potential for a further decline. Combining these signals, I suggest entering a short position at $0.303 when the RSI is below 20 and the price touches the lower Bollinger Band. Place a stop loss at $0.304 and set a target price at $0.289 to capture potential profits. This combined strategy offers a more robust approach, leveraging both momentum and volatility indicators for enhanced risk management and potential returns. Based on the historical data and forecast, Cardano has shown a downtrend recently, with the price fluctuating between a support level of $0.624 and a resistance level of $0.873. The RSI indicates oversold conditions, particularly between October 13 and October 26, fluctuating between 33.5 and 45.9. The Bollinger Bands show that the price is approaching the lower band, suggesting potential for a bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a buying strategy when the RSI reaches an oversold level of 20, which has not been reached yet, but we will be ready to buy when it does. The entry price will be $0.632, coinciding with the forecast price on November 1, 2025, and the RSI approaching the oversold level. The stop loss will be set just below the support level at $0.61 to limit potential losses. The initial target price will be the center of the Bollinger Bands, $0.635, aiming for a quick profit. If the price reaches this target, we will reassess the situation. If the price continues to rise, we will adjust the target price to the resistance level of $0.873. This strategy combines RSI and Bollinger Bands to capitalize on short-term price fluctuations while managing risk with a defined stop loss. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend from October 13, 2025, to October 26, 2025, with a recent bounce. The RSI consistently remained below 54, indicating a generally weak momentum. However, the forecast for the next week predicts a potential upward trend, reaching $4,620. Therefore, I propose a moderately bullish strategy combining RSI and Bollinger Bands. We will initiate a long position at $4,370, coinciding with the first day of the forecast. The stop loss will be set at $4,100, aligning with the established support level, to mitigate potential losses if the downtrend resumes. Our target price is $4,620, based on the forecast high. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, which was $3,890 on October 19, 2025, it suggests an oversold condition, reinforcing the entry point at $4,370. Conversely, if the price approaches the upper band, around $5,150, it signals an overbought condition, prompting us to take profits. Considering the forecast and the Bollinger Bands, I recommend adjusting the target price to $4,620 and maintaining the stop loss at $4,100. This strategy balances the potential for gains with risk management, capitalizing on the predicted upward trend while protecting against a reversal. Based on the historical data and forecast, Chainlink has been in a downtrend, approaching the support level of $17.2. The RSI consistently below 50, with values fluctuating between 34.0 and 47.0, indicates a lack of strong bullish momentum. The Bollinger Bands show that the price has been nearing the lower band, suggesting potential for a bounce, but the forecast prices remain relatively stable around $18. Therefore, I recommend a contrarian strategy, anticipating a short-term bounce off the support level. Enter a long position at $17.3, with a stop loss at $17.2 to protect against further downside. Set a target price at $18.6, aiming to capitalize on a potential rebound. To optimize the portfolio, combine this strategy with a risk management approach. If the price reaches $18.6, take partial profits and move the stop loss to the entry price of $17.3 to secure gains and protect against a potential reversal. If the RSI reaches 80 during the upward movement, consider taking full profits and exiting the position. This blended approach leverages the support bounce prediction while incorporating RSI and Bollinger Band signals for enhanced risk management and profit optimization. The final portfolio should be a long position at $17.3, stop loss at $17.2, and target price at $18.6. Based on the historical data and forecast, Pendle demonstrates a downtrend with increasing volatility. The RSI consistently hovers below 40, indicating an oversold condition, while the price struggles near the support level of $3.15. The Bollinger Bands show a widening range, suggesting increased price fluctuations. Considering these factors, I propose a contrarian strategy focusing on potential rebounds. We will initiate a long position when the RSI reaches an oversold level of 20, anticipating a short-term bounce. Specifically, if the RSI falls below 20, enter a long position at $3.01. Set a stop loss at $2.90 to mitigate potential losses if the downtrend continues. The initial target price is $3.30, based on the resistance level and a moderate price increase. If the price reaches $3.30, consider moving the stop loss to break even to protect profits and potentially ride further upward momentum. The strategy combines RSI oversold signals with Bollinger Bands volatility and support levels for a balanced approach. This strategy aims to capitalize on short-term price corrections within the broader downtrend. Based on the historical data and forecast, Aptos shows a downtrend with consistent support at $3.2. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast prices suggest a slight upward movement initially, but then a potential dip towards $3.1. The Bollinger Bands are narrowing, which could signal increased volatility. I recommend a contrarian strategy, anticipating a bounce from the support level of $3.2. I will enter a long position at $3.2, placing a stop loss at $2.9 to limit potential losses if the price breaks below the support. The initial target price will be $3.6, aiming for a 40% gain. To refine this strategy, I will incorporate the RSI and Bollinger Bands. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands, it presents a high probability buying opportunity. If the RSI is 30 and the price is $3.1, I will enter a long position at $3.1, setting a stop loss at $2.8 and a target price of $3.4. If the RSI is 45 and the price is $3.3, I will enter a long position at $3.3, setting a stop loss at $3.1 and a target price of $3.7. This combined approach leverages both momentum and volatility indicators for enhanced risk management and potential returns. Based on the historical data and forecast, Ethena shows a slight upward trend, although with considerable volatility. The RSI fluctuates between 34.9 and 51.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been near the lower band, suggesting a potential bounce. Considering the support price of $0.477 and the forecast prices, I recommend a long position strategy. The entry price will be $0.456, capitalizing on the current proximity to the lower Bollinger Band and the RSI nearing oversold territory. A stop loss will be placed at $0.434, just below the recent support level, to limit potential losses. The target price will be $0.48, aligning with the forecast and offering a reasonable profit margin. To refine this strategy, I will incorporate an RSI-based filter. If the RSI rises above 80, I will consider taking profits or reducing the position size. Conversely, if the RSI falls below 20, I will consider adding to the position. This dynamic adjustment will help to maximize returns while managing risk. The predicted price movement based on the Bollinger Band suggests a potential upward movement, and the support and resistance levels provide clear boundaries for the trade. This combined approach, blending technical indicators and price action analysis, offers a high probability opportunity for a profitable trade. Based on the historical data and forecast, Curve DAO has shown a downtrend with some volatility. The support price is consistently at $0.522, and the resistance is at $0.742. The RSI has been fluctuating below 50, indicating a generally weak momentum, and recently moved above 40. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. The forecast for the next week indicates a slight upward movement, but with some days below $0.541. I propose a portfolio strategy with 3 components. First, a long position with an entry price of $0.516, a stop loss at $0.522, and a target price of $0.54. This leverages the potential bounce from the lower Bollinger Band and a consistent support level. Second, a short position with an entry price of $0.545, a stop loss at $0.552, and a target price of $0.536. This strategy capitalizes on the resistance and potential reversal. Third, a neutral strategy, holding no position when the price is between $0.531 and $0.54. The most efficient portfolio would allocate 60% to the long position, 30% to the short position, and 10% to the neutral strategy. This approach balances potential upside with downside protection, aiming for high returns while managing risk. Based on the historical data and forecast, World Liberty Financial shows a downtrend with significant volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast for the next week predicts continued price fluctuations, but generally within a narrow range around $0.13. Considering the support price of $0.13, a conservative strategy is to initiate a long position when the RSI dips below 30, suggesting an oversold condition. Specifically, when the price reaches $0.131 and the RSI is 32.9, enter a long position. Place a stop-loss order at $0.128 to mitigate potential losses if the price breaks below the support level. Aim for a target price of $0.14, which aligns with the recent resistance levels and forecast prices. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, around $0.104 on October 26, 2025, and the RSI is below 30, it presents a high probability entry point. Enter a long position at $0.13, set a stop loss at $0.127, and target $0.14. This combined approach leverages both momentum, RSI, and volatility, Bollinger Bands, for enhanced risk management and potential returns. The portfolio will prioritize this combined strategy, allocating 70% of capital to it, and 30% to a simpler long position triggered by RSI alone. This diversified approach balances potential gains with risk mitigation. Based on the historical data and forecast, Eigencloud, Eigenlayer, shows a downtrend with fluctuating volatility. The support price is consistently at $1.09, while the resistance is $1.45. The RSI values hover around the 35 to 45 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a narrowing trend, suggesting decreasing volatility. Considering the forecast prices, which are generally declining and staying below $1.12, I recommend a short selling strategy with a conservative approach. The entry price will be $1.08, with a stop-loss order placed at $1.13 to protect against unexpected upward movements. The initial target price will be $1.03, aiming for a quick profit. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. When the RSI dips below 30, oversold, it could signal a potential bounce, but given the overall downtrend, I will not rely on this as a primary buy signal. The bottom of the Bollinger Bands reached $0.692 recently, indicating a potential oversold condition. However, the forecast suggests continued downward pressure. Therefore, I will maintain the short position with the initial entry at $1.08, a stop loss at $1.13, and a target of $1.03. If the price reaches $1.03, I will reevaluate the market conditions and adjust the strategy accordingly, potentially setting a new target or tightening the stop loss. This phased approach balances risk and reward in this volatile market. Based on the historical data and forecast, Bitcoin Cash shows a recent downtrend, but the RSI indicates oversold conditions. The forecast suggests a potential rebound, with prices fluctuating around $515 to $558. Considering the RSI, we can implement a strategy focusing on capitalizing on short-term bounces. I suggest a buy order at $515, setting a stop loss at $490 to mitigate potential downside risk. The initial target price should be $535, aiming to capture a quick profit from the anticipated rebound. If the price reaches $535, we should reevaluate the situation and consider extending the target to $558, aligning with the forecast high. To enhance the strategy, we will incorporate Bollinger Bands. When the price touches the lower band around $465, it signals an oversold condition, reinforcing the buy signal. Conversely, when the price approaches the upper band around $639, it suggests a potential overbought scenario, prompting us to consider taking profits. Therefore, the final strategy is a combination of RSI and Bollinger Bands. The entry price is $515, the stop loss is $490, and the first target price is $535. If the price hits $535, we extend the target to $558. This blended approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Virtual's protocol shows a clear upward trend, particularly with the recent surge to $1.52. The RSI indicates periods of oversold conditions, with values dipping below 40, presenting buying opportunities. The Bollinger Bands confirm this, with price frequently touching or crossing the lower band before rebounding. The forecast suggests continued upward momentum, with prices projected to reach $1.64. Therefore, my recommended strategy is a momentum-based approach with RSI and Bollinger Bands confirmations. We will initiate a long position when the RSI falls below 40 and the price touches the lower Bollinger Band, aiming to capitalize on the anticipated rebound. Specifically, we will enter a long position at $0.736 when the RSI is 36.3 and the price touches the lower Bollinger Band at $0.551. The stop loss will be set at $0.69, just below the recent low, to protect against a potential reversal. Our initial target price will be $1.14, aligning with the first day of the forecast. If the price continues to rise, we will adjust the target price to $1.64, based on the forecast data. This strategy combines technical indicators and future projections to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Dash shows a clear upward trend. The price has consistently bounced off the support level of $43.6, and the forecast indicates a continued increase, potentially reaching $55.9 by November 2, 2025. Considering the RSI readings, the asset has been fluctuating between overbought and oversold levels. The recent RSI values are trending upward, suggesting strengthening momentum. I recommend a long position with an entry price of $47.9. To mitigate risk, place a stop-loss order at $45.2, just below the recent low. The target price should be set at $55.9, aligning with the forecast high and providing a substantial profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trending near the upper band, indicating bullish sentiment. Therefore, we'll maintain the long position with an entry price of $47.9 and a stop-loss at $45.2. However, we'll adjust the target price to $51.5, a more conservative target based on the forecast and Bollinger Bands alignment. If the price breaks above $51.5, consider trailing the stop-loss to lock in profits and potentially capture further gains. This combined strategy leverages the trend, RSI, and Bollinger Bands for a balanced approach to maximize returns while managing risk effectively. Based on the historical data and forecast, Zcash demonstrates a strong upward trend, particularly evident in the recent price surge to $333. The RSI consistently above 60 indicates bullish momentum, with a peak nearing 74, suggesting the asset is approaching overbought territory but not yet significantly so. The Bollinger Bands have widened, indicating increased volatility and confirming the upward trend. The forecast for the next week projects continued growth, reaching $380, further solidifying the bullish outlook. Therefore, I recommend a long position with an entry price of $311, placing a stop loss at $305 to manage risk. For the target price, I anticipate a conservative target of $344, aligning with the forecast high, yielding a potential profit of $23 per Zcash. A more aggressive target could be $364, providing a profit of $53 per Zcash. However, given the approaching overbought RSI level, I advise taking profits incrementally as the price rises. This strategy combines the momentum from the RSI, the trend confirmation from the Bollinger Bands, and the bullish forecast, creating a high probability, high reward opportunity. This portfolio should provide high returns.